Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstarter video where I take a look at the major currency pairs from a technical perspective. We have U.S. non-farm payroll and Canada employment data coming out today. We're seeing U.S. yields move up modestly with the, well, not bad, 2.3 basis points in the 2-year. The 10 years up 1.3 basis points. We're seeing stocks coming back after the close yesterday for the National Day of Mourning, down modestly with the S&P down about 15.75 points. The Dow Industrial Average is down about minus 80 points. So let's get into the technicals that are driving these currency pairs, so we're aware and prepared for what may happen. Well, I'll start by taking a look at the euro versus US dollar, and I want to focus on this level right here. This is going to be a close support level that would tilt the bias more to the downside. We had a swing low right here. This is, I guess, 1, 2, 3, 4, maybe last Friday's trade, and then we had a low right here on Wednesday's trade. The price pushed off of those levels on each of those tests. The level's importance also comes into play off the daily chart. Again, this level comes in at 1.00272. If we go to the daily chart and look at this swing area back through here, this swing area has a low of 1.0273. So a number of different swing lows and swing highs forming this swing area back through here, where the price ultimately based right here and moved to the upside. We returned back to the level, fell below it the first day of the trading month of this year, and then started to use that level as support, as we saw off the hourly chart. So that's going to be my first level of support that, if broken, I would expect that we head lower in the euro versus US dollar. When the euro was lower, the dollar was higher, so it would imply a stronger than expected US jobs report. Now on the top side, there's another clear level that comes in up here. This area is defined by these different swing lows through here, here, and then a swing high through here. We fell a little bit below it earlier this week, and then used the level of support here before breaking to the downside, and we've been below it ever since. The 100 and 200 hour moving averages come around 1.0338 and 1.0341, and the swing area comes down to 1.0332 up to 1.0343. So get above that area right there would tilt the bias more to the upside. That would imply a weaker than expected U.S. jobs report on a move to the upside. We look toward the 38.2% retracement. The level comes in 1.0378. It also is home to some swing areas through here. So be aware of this area right here, 1.0378. Get above that level, and 1.0405. What's the significance of that? If I go to the daily chart and look at the 50% retracement of this move up from the 2022 low to the 2023 high, the 50% retracement comes in at 1.0405. So that's going to be another level of technical resistance that we look toward on further upside momentum. By the way, if we do break below the 1.0223 level, going back to that daily chart, that would we would have traders looking toward the 61.8% retracement at 1.0200. A nice, or 0.6, I should say, and the 102 level. That's going to be, obviously a natural support level. Get below that level, it opens the door for further selling pressure. Let's take a look at the dollar versus yen, and this currency pair is trying to move higher, and finding some resistance on the breaks to the upside. We did have this ceiling area right through here, where where if we have broken, it should lead to further upside, and we broke above it here, and moved above it here, and here. So all this week we've moved above this level, but we've also traded below it. What is consistent on the downside moves is the moving averages have done a pretty decent job, a real good job of holding support. Right, the lowest of the moving averages is a 200-hour moving average, and that comes in at 157.58. If we get below that level, that would be more bearish for the U.S. dollar, and have traders looking toward the 100-bar moving average on the 4-hour chart, which was last broken and tested right through here, way down around the 151-ish and 0.6 level. So long way to go. Getting below that level would also open the door for further selling pressure in the dollar versus yen. On the top side, we'll have to go to the daily chart, break above the high. The 158.88 level represents this high, and then we look toward this high, and really this high and this high right here become all the targets. 159.44, 167, looks like 21. 161.94. All those levels are targets on the top side if we get above 158.88. Finally, let's take a look at the sterling versus US dollar. On the hourly chart, we continue its the 3-day decline to the downside here in trading yesterday and trading here today. We after correcting higher, we rotated back to the downside, but since then moved back to the upside. Looking at the daily chart, the 1.2252 level, I'm going to show where that is on the hourly chart, was broken yesterday in the momentum lower, but then reestablished support at that level. So going into today's trading, if the price should rotate back to the downside and get below the 1.2252 level, that would be more bearish for the sterling versus US dollar. If we're able to stay above that level, there's a chance for further corrective action to the upside with 1.23515 as the next target. That level corresponds with this low right here from last week's trading. And then we start to look up toward the 100-hour moving average all the way up at 1.24115. Big sharp move this week to the downside from 125.74 all to 122.37. So there is room to roam on the top side if the market is supported by, let's say, a weaker U.S. jobs report. So be aware, be prepared. So that's my look at those three currency pairs. Let's take a quick look at the dollar versus Canada to see where we stand in that currency pair ahead of their jobs report. And if looking at the hourly chart, there it is right there. We've been muddling above and below this red box here over the last 2 or 3 weeks, more like 3 weeks. The collection of moving averages here between 143.63 and 143.79 is going to be the key barometer for this pair. If we move below that level, then we look toward the low of this red box. And if we break below that level, then we look toward the lows from this week. We did break below that outside of that red box, not only on Monday, but Tuesday, but then reestablish support against the low of the red box right through here. This is the swing areas on the downside. This is a swing area on the top side. Getting above those levels is key. Getting above those level will be more bullish. Moving below this level will be more bearish. So that's my look at these major currency pairs. Again, my name is Greg McCloskey. Good fortune with your trading. Bye-bye now.